Welcome to Precision Crypto Trading with JBGrowth. We're talking about Bitcoin stage analysis, an important component of triple confirmation and understanding trend. A powerful concept from the lineage of super performance traders, widely practiced by trading legends like Mark Minervini. Let's look at how the original author, Stan Weinstein, taught this concept, how it's applied today, and how we've adapted it to crypto. The characteristics of stage one would be a range bound price around a flattened major moving average like the 10-week SMA. This could also be called the neglect phase. Here we are losing time. The characteristics of stage two would be an upward trending price above a major moving average like the 10-week SMA. This could also be called the advancing phase. Here we are gaining capital. Stage three is often revealed by big increases of volume and volatility, a flattening major moving average. This is called the topping phase. Here we lose time, but there can also be big opportunities with blow off tops. In stage four, we see a downtrending major moving average, price ranges below. There may be rallies, but beware of the falling knife. In stage four, we are losing value and we are losing time. While the market often follows stages, keep in mind, the market will do what it wants to do. Think of this as useful context. A season can't predict the weather, but we know if it's summer on average, we're likely to have warmer days. And we know if it's winter, we're likely to have colder days on average. Seasons have characteristics. Stages also have characteristics, and they're very useful context. Let's look at stage analysis for Bitcoin going back to 2020. We see the price ranging around a flattened 40-week and 10-week moving average. As we see the moving averages consolidate, stack, and turn up, we also see the relative strength of the Bitcoin S&P pair start to rise and put in 52-week highs. As the price turns up above the consolidated moving averages, we can see Bitcoin entering stage two, rising above the 10-week moving average and not closing below until stage three topping. This move was 377%, just above the 10-week moving average before the volume went up, the volatility increased, and we had closes below the 10-week moving average. We see the moving averages start to flatten as the volatility and volume of Bitcoin increase, as the volatility ranges around. As the moving averages turn down, the price ranges below, and there is significant downtrend. 70% move just below the 10-week moving average. And remember, a 70% loss requires a 233% gain just to get back to even. So we see the price in 2023 start to move above the moving averages. The short-term average is above the 10-week. The 10-week crosses above the 40-week, and we continue the process to build another range in a stage one and eventually stage two. As the moving averages stack and turn up, we see the Bitcoin S&P pair turn green. We see it trending up. We see 52-week highs, and we see Bitcoin start to build a right side and to build a cup. Let's look at Bitcoin on October 29, 2024, as it appears to be trying to complete its cup and handle. Bitcoin made its consolidation and parabolic moves from the middle of the cup the last two cycles. When this happens at the top of the cup, it's called a cup and handle. This is a classic large cap market pattern. It occurs when the market is dealing with selling supply. It goes all the way back to railroad stocks in the 1800s. So here we are once again with Bitcoin showing the classic signs of triple confirmation. We see the trend. The moving average is consolidating and turning up with the price above. We see the Bitcoin S&P pair strength on green turning up, nearing 52-week highs. We see the classic signs of a stage two move as Bitcoin appears to complete its cup and handle. We continue to look for triple confirmation, but we know we may be entering another season.